Everybody to our monthly lunch and learn with Catholic Charities. I'm Scott Parr. I'm the director of the Financial Stability Director of the Financial Education Program as part of the Financial Stability Network within Catholic Charities at the Archdiocese of DC. I'm happy you're here to join us today. It's great to have you here. We've got a great program today. I've got a great presenter to help us understand how things are different now. But I want to talk a little bit, why am I doing this? I'm a retired certified public accountant, but I've done this because I'm concerned about the whole financial education of our country. And I think if people understand how things work better, they're going to make better decisions and they'll have more money to spend on the important things in their lives. So that's what I'm here today and why I'm here doing this, to try and help you do that. So I have a great guest instructor. Lisa Whitley has joined me today. She and I have been working on putting this presentation together on how to manage your debt during this COVID-19 period. And I've learned a lot, so I'm sure you will too. With that, I'll turn it over to Lisa to introduce herself.
All right, thanks, Scott. And welcome to everyone. My name's Lisa Whitley. And like Scott, I'm a volunteer with the Financial Stability Network, which I've been involved with about 6 or 8 months, but who's counting? I'm an accredited financial counselor candidate. And what that means is that in my normal non-Catholic Charities life, my job is talking to people every day about the issues that we're going to talk about in this webinar. So I'm excited to be involved in this first Lunch and Learn and looking forward to doing more of these.
Okay, and then the last person in our team here is our conference director, Emmanuel Duga. He's the one here who's working with you, running the Zoom behind the scenes for us. And if you have questions, type them into the Zoom chat and he'll help you get on or whatever issues you have. With that, so today, Emmanuel will be taking the questions. We're going to take questions at the end of the presentation. And to do that, you'll send your questions or concerns to Emmanuel using the chat feature in Zoom. We have some polling questions today, which we're going to ask you to answer using the chat feature. And lastly, the format of the presentation. So I'm going to talk about kind of where we are in the normal process for all these different topics, not in the COVID-19 extraordinary situations we have now. My presentation will have a blank background, just the standard of what it is. When Lisa comes in, she's going to talk specifically about the COVID-19, and hers has got a blue background, just so you can distinguish what is kind of normal, which you'll carry forward once this COVID-19 is passed. A lot of the leases will also apply, but some of it is unique to this period we're in. So with that, we're going to go to our first polling question. And is, what areas are you experiencing the most financial pressure? So we're just trying to get an understanding of where you are during this process. So if you could just go to your chat and answer 1 through 5, or you can put in multiple answers of which one, so we have a little better idea. So with that, Lisa, I know you've been working with us now for 6 to 8 months, and what's been the thing you've enjoyed the most?
That's a good question. I'm an extrovert, so I always love talking to people. So that's been a lot of fun. And, it's unfortunate that the VITA in-person tax preparation got shut down a bit early this year, because I love doing taxes.
Well, Lisa, you may be one of the very few in our whole audience today that loves doing that, but we're glad you're they can come see you to help them out. So with that, we're not going to be able to get the answers to the polling questions, but we'll get it later. So we're going to go ahead and jump into the presentation. We're going to talk about managing your credit cards first. Credit cards are a convenient way to pay for things, but managing them carefully to keep your costs down and avoid damage to your credit is super, super important. And we'll talk about some of the ways you can do that. Steps, keep good records. You know, where are you spending the money? You can keep a log. There's tools out there that will actually, you know, like mint.com, you know, where it's a software that basically helps you do budgeting, but also keep track of where you're spending your money. It actually links to your credit cards and bank accounts and downloads your transactions. Your check statements, check for mistakes if you're not downloading. Make sure that you're not being charged for something that you didn't some fraudulent transaction. Pay on time, at least the minimum due. That will keep your credit status intact, or your credit reporting will not get damaged. And if you can, pay the full amount. You are paying probably 18 to 20% interest a month or annualized on the amount of your outstanding balance. The banks love you. They're making lots of money on you. But if you can pay it off, pay it off. It doesn't help your credit report. It doesn't. I've talked to one of the people I was talking to. They thought it was helping their credit report by paying it off, not paying it off. I said, no, pay it off in full if you can. Understand the impact of different payment strategies, which we'll talk a little bit here shortly. And try to limit what you owe compared to your credit limit. So don't be using up all your credit limit. So paying only the minimum payment. A lot of people say, oh, I only have to pay. And you notice when the bank sends you the statement, they highlight the minimum payment, not the total amount due, because they want you to pay that minimum amount so that they can make more interest. So in this example, we've bought 3 different items at a price, and we got a credit card rate of 18%. And if you're only paying the minimum, you can see the interest on the TV. You'll pay $132 for a $500 TV, the interest. And it'll take you 3 years to pay it off. The more surprising one, the furniture. You spent $2,500 for furniture, but you'll spend over $5,000 in interest. So your furniture now costs you $7,863, and it takes you 23 years to pay it off. The credit card companies are not looking for you to hurry up and pay it off because they make more money. So it's incumbent upon us, the consumers, to make sure that, hey, we're paying off as much as we really can. Okay? Just to give you some perspective. So in the first example is one we talked about, if you're only paying the minimum payment. And the second one, if you're making an extra $24, and the third one is an extra $41. Instead of 23 years, you can get it, if you pay an extra $41 a month, you can get it down to 3 years. And you can save yourself a lot of interest, $700 versus the $5,300 in interest. So again, pay it off as quickly as you can, keeping in mind all your other expenses, and you still need to have a little bit of money in your emergency fund also. Okay. Another credit card option to look at is if you have several credit cards with balances that you can't pay off every month. One option is to make sure you have one credit card you're paying off every month, so you're not accruing any interest on it. Okay, and you make sure that one gets paid every month. When you pay it off every month, you get a 25-day grace period where no interest accrues. And as long as you make the next payment on time, the full amount, you'll never pay any interest. That's the objective. You don't want to pay interest because a lot of the credit cards will actually give you things back, money back. So then you're making the credit card work for you instead of you paying a lot of interest. The second, and this is to get another credit card. You may say, well, that seems a little odd, a little crazy, but there are credit cards out there that will offer you ability to transfer the balance with 15 to 18 months at 0% interest on the transferred amount. So if you've got 3 credit cards and a balance, say of $5,000 between them, you transfer them over onto this one credit card, then you're gonna have no interest due on that for that 15-month period. Okay, and then the third one, based on the transfer amount, I've got an example here. If you transfer $2,100 to the new credit card for 15 months, you could pay it off $140 a month in the 15 months. You'd have the whole balance paid off. Again, you can't be accruing other credit card debt while you're doing this. You want to kind of, keep a tight lid on what you're doing. But let's say you can only pay $100. Well, even then, you would have, after 15 months, you'd have your balance down to $600. And you could look at getting another credit card somewhere this one and transfer it again and then get it paid off. And now you've gotten rid of your credit card debt. Yeah, a good rule of thumb, what my father taught us is, don't put it on your credit card unless you have the money in the bank to pay for it. If you do that, it gets a little easier. If you don't have the money to pay, make a large purchase, just wait, build up, save the money. So, Lisa, do you have any other thoughts on other ways people could deal with the credit card debt?
Not different ways, but I could opine a little bit on the balance transfer and what I've seen, if you'd like.
Sure.
This is actually a very popular thing. And the question I always ask people when they are thinking about this is, what was your plan to pay off your credit card debt? Pretend you never got that offer in the mail saying 0%. How were you going to pay that off? Because if there wasn't a plan before, this may not help. What happens very often is that someone will transfer the balance to that new credit card, and then they will just keep spending. So it's actually worse than they were before. Now they have balances on 2 different credit cards. That doesn't help at all. So when you think about this strategy that Scott has described, which is a really solid way to get out of debt faster, what you need to think about is transferring that money to that 0% credit card and never putting that credit card in your wallet, burying it in the backyard, putting it in the bottom of the drawer. It just doesn't exist. And setting up an automatic payment to pay off that 0% card in whatever time period you need to pay it off in order to keep the 0% interest, because when that time period runs out, that interest rate is going to jump, typically quite high. And then finally, you should also know, and I just really became aware of this very recently, if you have a 0% interest card and you did not do as I asked, bury it in the backyard or put it in the drawer, and you use it, those charges that you make, they're not going to be at 0%. They're probably going to be around 20%, and there may not even be a grace period. So be very, very cautious about that. Basically, if you're going to employ this strategy, the first question is, what is my plan to get out of debt? And if you don't have that plan, that's what you have to get in place first.
Okay, great. All right. I'll let you talk. What's a little different during our C19 world?
Yeah, so our C19 world, it actually makes it sound almost attractive, C19. So the first thing to know is right now, just about every credit card company out there is working with folks to help them through this. But nothing will happen automatically. The most important thing is if you are having problems paying your credit card debt because you're impacted indirectly or directly by COVID-19, you need to call your credit card issuer before you become late. You need to do it immediately. When you first sort of have the inkling that, oh, I'm going to have a problem making that payment on the 15th, you need to get on the phone and call them. Actually, I'll say it a little differently. You need to go online first because of the volume. Some companies are actually taking these requests online, but for the most part, you're going to have to give them a call. But most companies are being very generous and will offer to defer payment for some time. But just remember that while you're not making a payment, interest is still accruing because you still owe that debt. And also, one of the concerns people had was, well, if I have a payment deferred, is this going to hurt my credit? No, it's not going to hurt your credit. You're still paying as agreed, and the agreement is for a couple months you're not going to pay. So if you were current in your payments before, your account will remain current.
Okay, great. All right, we're going to move on to the next topic, housing and auto loans. I don't have a lot here. I will talk a little bit about refinancing. So if interest rates will go down like they recently have, look at what the refinancing look at refinancing the loans at a lower interest rate. Generally, you want it to go down 1% at least. If it's not 1%, it's probably not worthwhile because of all the extra closing costs you have to pay for. But odds are it may have, and interest rates, I know, like on a new loan, they're like 3% or less. Just and car loans are down 1.5%, 2%. So it gives you something to think about. But that's the kind of the general rule. I'll let Lisa talk a little bit about some of the other issues with housing and auto loans in the C-19 world.
All right, thanks, Scott. So I think most of you have heard of the CARES Act, which was passed by Congress in March. And one of the provisions in that new law was that any mortgage that is backed by the federal government, and that's 75% of the mortgages that are out there. So let's just assume that if you have a mortgage, the federal government is involved in it in some way. Any of those mortgages, you are automatically eligible for a payment pause, or what they call a forbearance, up to 12 months. So for up to 12 months, you don't have to make that mortgage payment. But very importantly, it's not automatic. You have to call your mortgage servicer. Your mortgage servicer, that's the company that you write your checks to every month. Well, I mean, I know you don't write checks, but automatic payment to every month. You need to call them up and tell them that you've been impacted by COVID-19. Someone in your household situation has been impacted by it, and you need to have a forbearance on payments. You're right, it is in law, so it's not like they could say, well, gosh, I don't know if I want to give you a forbearance or not. It's your right to have this, but you do need to ask for it. Do understand that you're still responsible for these missed payments eventually. And what most mortgage servicers are doing and have now been instructed to do is just to extend the term of the mortgage. So if you pause 6 payments, then your mortgage will be 6 months longer than it would have been. But just be very sure that you ask how they're going to treat these missed payments, and just be sure you understand how that's going to work. Okay. Want to go to the next slide?
Okay.
So renters. So unlike mortgage holders, renters really did not get any relief in the CARES Act at all. So renters are still responsible for paying rent. There is no such rent strike is not a thing. That's just not a thing that's happening. But different localities are handling things differently, again, by local law. So for example, in DC, if you're not able to pay your rent at this time, there are no eviction actions being started in eviction court until 30 days after the end of the emergency. And you may have seen that yesterday the state of emergency in DC was extended to June 8. So that means in DC, there are no eviction actions being started until July. In Maryland, somewhat similarly, there are no eviction actions going on right now, and they will not go on until after the period of emergency is ended. And when that will happen in Maryland is a little bit up in the air, but certainly not in the month of May. I'm going to go to the next slide. So if you can't pay your rent, if you're in this situation, you cannot pay your rent, the first thing you want to do is contact your landlord. Again, immediately, right when you first have an inkling that you're going to have a problem, and see if you can negotiate for a lower rent, at least temporarily. The thing you want to understand is that you're in a pretty good negotiating position. If you have been paying your rent on time every month for a long time, at this point, a landlord does not want to have a vacant unit. We're going to a period now of very high unemployment. So if you're a landlord, honestly, sticking with the tenant that you have, even if it's at a lower rent for a period of time, is probably a better move for you than to try to go to eviction court in July, possibly end up with an empty unit. Who knows how long it'll take you to re-rent it. You may have to drop the rent anyway because of the economic crisis. So don't be afraid to negotiate with your landlord for a lower rent, but also understand that if push comes to shove at this point, there are evictions for non-payment of rent are not happening, at least for the time being.
Okay. All right.
Auto loans. So auto loans are pretty much working the same way credit cards are, meaning that there's nothing automatic going on, but pretty much every auto loan company out there is working with folks to defer their payments. But again, you need to call them and specifically ask for that. I'll also add that if you are struggling at this time and you have an auto loan and the amount of the loan is less than the value of the car, the question I really want you to ask yourself is, do you need this car, or do you just really want this car for convenience? Because this may be the time to have a very hard conversation about, can you really afford this car, and or is this just a car that you keep for convenience? But nevertheless, if you do have a loan, contact the lender, and most are willing to work with you. Again, don't wait till you're late to do it though. Do it pretty immediately.
Okay.
Leasing is a little bit different. Leasing companies are like loan companies, offering some payment deferral. It's a bit more case by case. It's a little bit, it's not quite as broad. But absolutely, if you have a leased car and you are having a problem, contact the company, explain the situation. If there are late fees, you absolutely can ask for them to be waived. One thing that's happening that's new is that if your lease is ending soon, and I don't have a good definition of what soon means because it means different things to different lease companies, what's happening is pretty automatically they will give you a 6-month extension. And that can be useful if you're in a situation where you absolutely have to have a car in order to get to work, and your lease is ending and you're obviously not in a situation where you want to enter into a new lease. So that can give you some breathing room. And then of course, obviously, if unfortunately, if you actually are diagnosed with COVID-19, you may not be able to actually return the car immediately. So know that the 6-month extension is available pretty much from all leasing companies. Most are doing it automatically, but you should also call. And then just understand, and hopefully you understood this when you got into the lease, ending a lease before its term is expensive and difficult. So when you think about payments that have to be made when you're juggling which payments to make first, this may have to be one of them.
Okay. All right. We have a second polling question today. Again, answer just 1, 2, 3, or 4. What best describes you? We're trying to understand. We've sent out our invites to many different people, Catholic Charities, our Financial Stability Network, our VITA customers, or we're doing tax returns, or some other way. So trying to figure out where you are so we can, better serve you. So if you could be filling that out. With that, I mean, we got the results back on the first polling question. The number one, 35% student loan was the number one. Credit cards at 23%. Auto loans at 18, mortgages at 12, and then other was 12. So we're coming up to the student loans, and I want to get right into that because we got a lot of material in here I want to make sure we get covered. So on student loans, there are two types of student loans. The federal student loans, and then there are private student loans. If you're not sure which one you have, you can call your provider and find out. But there are different rules that apply to each. So for federal student loan repayment options, you generally have a grace period to start with, where you don't have to pay until after you're done with school for several months, like 6 months after. They have a standard repayment plan that's generally over 7 years, or you can have structured payments based on a graduated payment plan or an extended repayment plan. So they have a lot of different options in how. Again, the longer you take to pay it off, the more interest you're going to pay. So here's some other types. I'm not going to go into the details of these, but then when you're done and you should be looking at these, all the options, what's going to work best for you when you start repaying your student loans. Forbearance and deferment. Temporary forbearance is a temporary postponement or reduction of payments due to financial difficulty. A deferment is a temporary suspension of loan payments for specific situations. So there's a couple terms we're going to be throwing out and we'll talk a little bit more about. Also in the federal ones, there's different loan forgiveness and cancellations things out there. So if the school you went to closed, you can get the loan discharge potentially. If you're doing a public service loan forgiveness, teacher loan forgiveness, total and permanent disability discharge due to death. These are all different things that exist within the federal student loan program. They don't necessarily exist in the private. So private loan is just a personal loan. Again, actions taken to prevent default. Explore different payment due dates. You can talk to who you're working with at the company that's managing for the government. Maybe a different repayment plan option, forbearance, deferment, loan forgiveness, loan cancellation, loan discharge are out there. Declaring bankruptcy, though, is one that does not automatically discharge federal student loans, and generally does not. The government changed the law on this because I think a lot of students were running up this debt and then go into bankruptcy and get it all washed. So if you're going to go down this path to get rid of your student loans, I would recommend you talk to an attorney. Make sure it's actually going to accomplish what you want. Also, beware of student loan scams. Never pay an upfront fee. Only scammers promise to forgive or fast loan forgiveness. If something has the Department of Education seal, doesn't mean it's legitimate, so just be careful. And don't share your federal student ID number with these folks over the phone. Yeah. Private student loans. Again, this is more like, the auto loan or the mortgage. If the interest rates go down, look to refinance the loans at a lower interest rate. I was just looking at what the refinance rate, I was looking at the credit union, they had the rate at below 3.5%. So I've got an example here where my current loan's at 8% for $25,000, and I'm going to change it to 3.5% and what it would save me. So you can see my monthly payment at 8% at $303. If I were able to refinance and take down to 3.5%, I'd go to $247 and save me $56 a month, and over $600 a year, and over the 10-year loan would save me over $6,000. So it's something that's out there. You can also take your federal loans and bring them make them a private loan to refinance. However, all those things I just talked about previously, Lisa will talk a little more on this, don't exist. The forbearance, the deferment, a lot of that doesn't exist once you flip sides. So be careful. I mean, if you've got a steady job and this makes sense, and don't think you've got a risk of losing your job, this may make it work for you. So something to consider. Lisa, I'll let you talk about it.
All right, so we're back to the blue background. So we're in a COVID-19 world. So if you have a federal student loan and Yes, if you have a federal student loan, you do not need to make a payment until October 1st. This is probably the only thing I'm going to tell you today that is automatic. Under the CARES Act, all federal loans were put in forbearance, which is a payment pause, as we learned, and the interest rate was set to 0%. So nothing you need to do. That just happened. If you log onto your account, that's what you're going to see. So what happens is that the amount of the loan hasn't changed. What's happened is the loan term is extended. So if you had 5 years left on the loan and you don't make any payments, however many months you don't make payments, they'll just tack that on the end. I want to also mention that if you are participating in the public service loan forgiveness program, that is not affected by this. And if you're not in PSLF, forgive me because I'm going to get a little geeky here, but if you're in PSLF, you need to know this. If you're in that loan forgiveness program, you probably know that you need to make 120 qualifying payments. If you make a payment during this time, between now and October 1st, when you're not required to make a payment, those payments will still count as qualifying. That's a little different than the way forbearance usually works. So that's a detail for PSLF, and if that's a little bit confusing, at the end we'll have where you can contact us for more granular information. And then finally, again, under the CARES Act, if your wages were being garnished for prior student loans payments that you missed, garnishments have stopped until October 1st. So as I said, between now and October 1st, if you have a federal student loan, you don't have to make a payment. So the fact that you don't have to doesn't, you still can, but you don't have to. So the question is, should you stop making a payment? Absolutely. If you or anyone in your household is experiencing a financial hardship, yes, do not make a payment on your federal student loan at this time. Perhaps you are still employed, everyone in your house is still employed, everything is great in that respect, but you don't have any emergency savings. You don't have any money in the bank. If that's the case, then my suggestion to you is to not make a payment on your federal student loan between now and October, and take that amount that you were paying and save it and use this opportunity to build up your emergency savings. If you are gainfully employed, everyone's employed, you've got savings in the bank, but you've got a high interest credit card out there or a high interest auto loan. One strategy you could employ is, instead of making that federal student loan payment for the next few months, take that amount and direct it to that higher interest credit card. Because remember, during this period when these federal student loans are in forbearance, no interest is accruing. But finally, if you don't have any other debt, you've got your savings in place, everyone's employed, everyone's happy, then yeah, go ahead and keep making the payments, because 100% of that payment you make is going to go to principal, and that's going to help you get out of your student loan debt faster. Private student loans were not covered by the CARES Act, as you might imagine, and that means that those payments are still due. Having said that, most private student loan lenders, just like credit card companies, they are working with folks to defer payments. So absolutely call them up and see what they can do for you.
And then a couple other things you want to bring up here, I know. Yeah,
I'm just going to cover a few more things. IRS debt, because I know this is something that is pretty common. I think by now most people have gotten their stimulus check, hopefully. I know some people haven't. At any rate, if you have not, I just want you to know that if you owe back taxes from 2017, 2018, 2015, whatever year, the fact that you owe back taxes does not in any way affect your stimulus check. So that's just to be clear on that point. If you're on a payment plan with the IRS for back taxes, there are no payments that are going to be due between April 1 and July 15th. So that's just a couple months. That's just really, well, June and July. However, it's not automatic. You have to contact the bank to stop the automatic deduction. So if you're on an installment plan and they're scheduled to pull money in June or July, call your bank and have that stopped because it's actually not due. And then finally, the IRS won't be putting any new liens or wage garnishments in place at this time.
Okay.
So this was a question that we had, and luckily we have an answer for it. It may be the case that in your household you really are under stress, and it doesn't matter how you do the math, not everybody is going to get paid. That's just the way it is. So what do? Well, the first thing is ask for options to put payments on pause. Every payment, credit card, auto loan, mortgage, working with your landlord, even your utilities. That's the very first thing you need to do. Having done that, you're looking at, the amount of money you have. How do you prioritize it? If you're a renter, prioritize paying your rent first because you need a roof over your head. And there's no forgiveness program for renters. Hopefully your landlord is working with you, but pay the rent. That is like the number one thing, pay the rent. After that, as I said, you've put a lot of your payments on pause. You've paid your rent, a lot of these payments on pause. Whatever money you have left over that you're not spending on your food and your utilities, but maybe you put your utilities on hold, just save it. Right now, just save it. You've got your credit card payments or your auto loan payments on pause. They're not looking for a payment. Save that money. At a certain point, though, it's going to be time to start paying again. So what do? Your car payment takes priority over your credit card payment. Why? Because if you miss one payment or two payments, your car will be repossessed. So your car payment has to come first. After October 1st, you're going to want to prioritize paying off your student loan debt over the credit card debt, because federal student loan debt, if you don't pay it, it's the federal government. They can come after you in ways that the credit card company cannot. So that's going to have to be a priority. And that's when you'll have to think about some of the options that Scott described in getting a payment plan that might be more appropriate for you. And then finally, private student loan debt, that needs to be a payment priority over credit card debt as well.
Okay. Oh, did I skip one?
Oh, I don't think so. That's next.
Okay.
There we go. So we're going to try to end on a more positive note with some things to do. So first, prioritize building up savings. I think this might be the third time I've said it. I might say it 2 more times before we get off of this webinar. In the before times when we talked about debt management, the first thing we would talk about is how to get out of debt faster. But we're not in the before times. We're in some really unusual and very serious economic times. And right now, the most important thing really is to prioritize building up savings first. And that really has to be the first order of business. So if you've been able to get payments deferred, keep that money in the bank, and let's just really concentrate on that. Take advantage of opportunities to refinance to a lower interest rate. If you have good credit and if your situation is stable, that is something that can be available to you, whether it's a house, whether it's your car, whether it's your credit card. This is actually a good time for folks who have that ability. Third, absolutely, you have to be proactive. Do be proactive. Proactive in contacting your creditors to let them know that you're having a problem and you need some assistance. Proactive in seeking out opportunities to refinance and lower your debt costs. Proactive in scrubbing your budget and looking for ways to save. And then finally, during this time, maintain an excellent score. So for example, you have a good credit score, but you need to get some payments deferred. If you're getting those payments deferred before you're late, your credit score is going to be fine. The important thing is you really want to come out of this period in as good a shape as possible. And having that excellent credit score protected is really going to help you in the future, either to take advantage of lower interest rates. It'll help you if you decide that moving is part of your next plan. So all the old rules apply. Pay your bills on time if they're not in deferment every time. And then I think next month we're going to be talking a lot more about credit scores and credit reports. So maybe that's a little teaser for that.
Right. Wow, that was great information, Lisa. From here, we're going to go into a few questions that we've gotten already. The first one is, how do I go about asking for a deferment or forbearance? I mean, what do I say when I talk to them? How do I do that?
And I guess I'm going to answer that.
Yes, help me out.
So Scott, you've called me up on the phone. You know, the important thing when you're negotiating with any of your creditors is, one, do it early. Do it when you first have an idea that you're going to have a problem. Don't wait until it's late. It will put you in a much better light with your creditors if you do it before you're actually late. The other thing is just understand that millions of people are in this position right now. And so when you call your creditor, you don't really necessarily need to go into a very long story about the various ways you've been impacted by the economic crisis. Just be very clear that, you know, due to the current environment, you and your household have experienced loss of income, and you're asking for a deferral of payments. So you don't have to quite tell them the whole story, because you know what, they know the story. When you go, and really before you dial the phone, know what you're asking for. What is it that you want to get? Are you asking to defer payments for 3 months? Are you asking for a late fee to be waived? Perhaps last month you had a loss of income and you paid, but you had to pay late, or you paid in part and they charged a late fee. So you want to get that late fee waived. Go in with a particular request. Now, will you get everything you asked for? Maybe you'll get more, maybe you'll get less. But I think you're going to be in a much better position if you can call and say, we've had a loss of income in our house. I would like to defer my payment for 3 months, rather than, we've had a loss of income, what can you do for me? And just see what they say. And then finally, whatever you and the creditor agree to, get it in writing. And that could be as simple as an email. It doesn't have to be necessarily a letter in the mail. But at the very minimum, get the name of the person that you spoke to, that you made the agreement with. And if there's any kind of confirmation number that they can offer, take that as well.
Okay, great. So we have a question here. They have an auto loan, and there's an offer to take a few months off, but interest continues. So take out, don't, but interest continues. I feel this is putting me in a deeper hole, but I can keep up with the payments right now. Should I, shouldn't I? Any suggestions?
If you can't keep up with the payments and you can't sell the car, then yeah, take the pause. What can you do?
But on the flip side, I can keep up.
Oh, I'm sorry. I thought he said you can keep up. If you can keep up with the payments, so let me kind of go back to what we're saying before. If you don't have any savings, then it's going to have, it's a little hard to answer it in the abstract. My sense is, if you're still able to make the payments, your situation is stable, then absolutely keep making the payments. There's no reason not to. Your goal is to get out of debt. If you're struggling, then no, I would skip the payments. Or if you had $0 in the bank, like zero, then I might take advantage of taking a pause for a month or two to save some money, so that if things change in the future, you have a little something to fall back on.
Yeah, great. The next one was to transfer a balance, does it have to be, and I can answer this, does it have to be in the same company or the same credit card company? And the answer is no. You can go from one credit card company to another credit card company to transfer your balances. You don't have to maintain within the same company. So I think we've answered this next one about the, yeah, we did. Let me see. Give me a second here. And I'm not sure you'll be able to answer this one, but it says, how can I find out if my landlord received an deferment on their mortgage so I can get a rent break?
Well, oh, that's a good question. Yeah, I don't know the answer. I don't think there's any particular way that you can. I don't think it's particularly public. And it is interesting because as the law is written, and I could stand to be correct, but I'm pretty sure on this, although landlords might get a deferment on their mortgage, they're not obliged then to offer you a rent deferment. What one would want them to, that was the intent. I don't actually think they're actually required to. So I honestly don't know if there's a way that you can actually know, other than asking them, and they may or may not want to tell you.
Right, right. So the next one, can you refinance a federal student loan? I don't know that you can.
No. I mean, and keep it federal.
Right.
No, I mean, what you do with federal loans is if you have multiple federal loans, you can go through a consolidation process where you basically, let's say you have 4 different federal loans from 4 different years, and they can consolidate it in one loan. But that doesn't actually make the interest rate lower. That just gives you one loan at a blended average interest rate. So it's something that somebody may do for convenience, but it's not for savings purposes.
Right. So one of the things, I know we had another question on along the same thing on student loans for next year. I know the rate is tied to the treasury rate, and plus I think it's 4%, but what are they, if you're going to have students go into college next fall and they need student loans, what should they expect and how to manage those? But the rate should be substantially lower, correct, right?
Yeah. Rates they set annually. They set in July. So anyone taking on a new student loan starting in September, which is just a few months away, they will at least enjoy a lower student loan rate than what we're seeing now in existing loans.
Yeah, it could be sub 5%, less than 5%.
Yeah,
7 or 8 work we've been seeing. So.
It'll be low.
Can you provide more details on the PSLF eligibility and how to apply? You know?
I would say that that's a good one to send to that email address you see there. However, I would say the Department of Education website is actually really good on this, and I believe it's ed.gov. I was just double checking. But I would go to the Department of Ed website. But absolutely, if you have particular questions, if you could just send to that email address, we could certainly respond to that.
Okay. Yeah, the last question I see here is it a good time to buy a home if you have a stable income? And I'll answer first and you can add on. There's not a better time. We haven't seen interest rates this low in my lifetime. I mean, I know my son's in the process, and you're looking at 3% or less interest rates right now. And they'll probably stay low for a little bit, but I kind of think that the rates probably won't start going up until the economy starts to heal. So now is a good time if you've got the stable income to do it. As the economy grows, I think then the interest rates may tick up a little bit. Your thoughts, Lisa?
My thoughts are pretty much along that line. Certainly from a market standpoint, it's a good time. So if all your ducks are in a row, and by ducks in a row, I mean that you have an emergency savings balance worth, good 3 months of expenses, that in addition to that, you're able to put down a good down payment, and I define good as 10% or more, and your employment, you don't have other debt or other high interest debt rather, then yeah, and your employment is stable, then it is, from a market standpoint, a good time to buy a house. I would just ask that you really run the numbers carefully and sort of stress test them, as they say, that if your situation changed, because we are going to some very uncertain times, a very deep recession. And I think that, not to be doom and gloom, but I think that people do have to think very creatively about whether or not they think they will be affected. You may not think that you will be affected, and yet, a lot of things can happen if you remember the Great Recession. So,
right. Okay, a couple more. If you were not paying your loan before the crisis, would you still have the automatic standby up to October 1st, or will you have to request it?
I assume you mean I assume it means student loans.
I presume, yes.
Yeah. So so if you were not paying, basically there are no student loan payments due, right, for federal student loans between now and October 1st. So whether you were paying or not paying, or late or not late, there's nothing that happened automatically. And if you were being garnished, that has stopped. So yeah, if you weren't paying before, that's an issue, but at any rate, nothing has changed.
Okay, we have another question. If you are interested in improving your credit score, and as Lisa next month that will be kind of what we'll be focused on. Should I prioritize credit card payments over public student loans, or I guess, or government student loans?
No, because your student loan payments are reported to the credit bureau the same way as your credit card payment. So, being late on either is going to hurt your credit score if that's the intent.
But I have
the intent might be have your credit utilization. You think that may be the question, Scott?
Yeah, I mean, right now you have this credit pause for your student loans. So yes, in that respect, if you don't have to pay your student loans and you got credit card debt, get the credit card debt.
Yeah. After you've built up your savings. Have I said that enough times?
Yes. Because, I mean, the thing is, if things come back quickly, you'll have the money to pay off your credit cards. So, but it doesn't necessarily work the other way, that you'll have money in the bank if your credit cards are paid off. You don't. So you want that, that emergency fund there to kind of tide you over in those type of situations. So I appreciate everybody joining us today. That's the end of our questions. And, if you have specific questions, please send them to the website you see, FSN, it's our email address. And we have experts in a lot of different fields. We do tax planning. We have a mentor program where if you have some specific issues you're working through, or you need help, we can have a mentor or walk with you through the process. So particularly if you've got a lot of different balls and you're trying to figure out, that's what the mentors are kind of really focused on to help you. If you want to work on improving your whole financial tracking of costs, where you're spending your money, your budgeting, we have coaches that will help you on that too, and work with you for up to a year to kind of get you on the level set, place so you can move forward, and they'll help review everything with you. So we have those resources available. If you have past tax issues, we have our VITA program that can help on that. So we are here to help you. And so if you have questions or need help, send an email into fsn@cc.dc.org, and we're here to help you. And we're nothing but a bunch of volunteers, but a lot of us are retired CPAs, financial professionals. So we've got a wide breadth of talent. And the good thing, the cost to you to use us, zero. So we're all doing this because we feel this is important. So with that, I will say goodbye and hopefully we'll see you next month. Thank you.
Thank you.